It's officially February, and that means we have to go through our top 5 stocks for the month of February 2025. Let's just jump right into it with our first stock on the list, which is SoFi, ticker symbol SOFI. This is probably a name you've heard of a lot, and just recently they reported earnings, and their CEO quoted best year ever for the company, and more specifically the stock. The stock's been on a nasty rally basically since the summer, where we were at lows around $6 per share, rallied all the way up to now all-time highs at $18 per share. Massive move to the upside for the stock. The company just reported earnings, and with that being said, best year ever. Well, they reported pretty good fourth quarter earnings, but the outlook itself was the problem here. Taking a look at their quarterly earnings, you can see they got a net revenue between $725 and $745 million with earnings of 3 cents per share, while Wall Street penciled in $688 million with 5 cents per share. So that was a pretty solid beat, but we have to take a look at the next paragraph here and look at, for fiscal 2025, the company expects adjusted net revenue to be between $3.2 billion and $3.275 billion, and 25 cents to 27 cents earnings per share, where analysts are expecting $3.02 billion and an earnings of 28 cents per share. So the financial outlook for the fiscal year 2025 is looking a little bit lower than what the analysts were projecting. And after a massive year for the company, the CEO just definitely was taking into consideration that they had a monster of a year, but did quote that looking ahead, they are still on track for the year of 2026, that they maintained a target goal for the year of 2026 to have earnings per share of 55 cents to 80 cents per share. Now, I don't know if anyone really heard that news when it was reported, but that is a massive, massive reinstatement for the company and the stock itself to really show that the company is headed in the right direction. And although this upcoming next quarter in the fiscal year 2025, we may have lower guidance than what analysts are expecting, this is going to be a big building year for the company to ramp up into 2026 and especially into 2027 and 28. So I think that SoFi reported a very strong earnings, and you know what? Right now, the stock was down 4% on the day on Friday off of these earnings, and we're trading pretty hot right now. We had that massive rally into October and November, especially. We got up into the mid-teens and closer to $20. And I think that if we kind of just draw this out real quick for you guys, if you're looking to get into SoFi and you haven't yet gotten in, we got to look for our support area, which is closer to this 1350 area down here, as just an area to watch out for as a nice support to the downside. We have resistance up here at all-time highs at 1840-ish area where we tapped, and then we have like this midsection where we really tend to trade around this $16 area. So taking into consideration, right now we're trading at a pretty darn good level to get into an entry point, which is about that midpoint of where we're actually trading in between right here. If we pull back down below 16, I think you could pick up some shares down here around $15 and $14. If it breaks below 14, I think we have some downside to around this $10 or $11 area where this 180-day SMA line is. So just taking that into consideration when trading and moving forward, that SoFi I think is a great long-term opportunity for an investment, and I think that a little pullback here off of earnings will be healthy for the stock after, it's had quite a big rally. So I think a nice pullback here will definitely help the stock and start moving forward into 2025. I think we're going to see a massive rally later on in the next coming months that's really going to push this higher. So I think it's a top pick for the month of February to pick up. Now, following suit with stocks that have pulled back in the past couple weeks, NVIDIA, ticker symbol NVDA, has been on my list for the past several months, and it's going to continue for the month of February. Now, you can skip through this one, but hear me out. NVIDIA itself, yes, may be down quite a bit off of this 153 high area, which is a little concerning for investors because a lot of people, I feel like, are at the 130 to 140 range where they started buying in and wanted it to get higher than 150, 160, 170 was that target goal in mind. So there's a lot of people that are either down bad right now or sold out at a pretty big loss. But for you long-term investors, you got to remember, if you're really long-term with NVIDIA, you know their game plan for 2028 to 2030 and moving forward. And that game plan, as of right now, has not changed until we hear any news or information that our game plan and our sales, or not necessarily sales, but the actual product that they're distributing is slowing down, and companies aren't needing as many graphics cards, aren't needing that big AI push that we're talking about, if they're not needing, then we really gotta kind of pull back on the price targets here. But until then, we haven't seen anything yet. The stock and the company itself is still the same Nvidia that we invested into a couple months ago and a couple years ago, and we're just growing at such a rapid rate that a little pullback is very, very healthy. We saw it with just the past stocks in SoFi, and you see it right now with Nvidia. This has been on a massive run. Just in the past year alone, you've seen this thing run from 50 to 60 bucks all the way up to now $150 at highs. Now, yes, is it a little overvalued right now? Could be. But I think that this is a great opportunity for a pullback down here at the 120 area. And if it continues to fall lower, closer to 110, I think that we could pick up even more shares. And even if we get the opportunity for it to be below $100 or near $100 again, I think that this is a great time to look into potentially going in for more shares. And if you're long term and you have that mindset, then this is a great opportunity right now, February, with the timing of this stock. I think it's a great number 2 pick on the list for me to watch out for, and for you guys as well, to be able to say, look, if you're going to add or start a position, this is the opportunity. When people are scared, you want to invest into the market. Nvidia has upcoming earnings towards the end of this month on the 26th, so I think you're going to see a slow but steady ramp up, and it's going to reverse back up to the upside. And that pre-anticipatory hype up until earnings, that's what you're going to want to play off of. And I think that right now there's a lot of scary bullish or bearish sentiment rather in this stock, and a lot of people are selling right now because of the DeepSeek news. And because of that, I think it's a great opportunity for you to pounce on and take that upper hand. The third stock on my list is Palantir Technologies, ticker symbol PLTR. Now, this is another top pick in my opinion. This name, we've been in this thing since COVID, since it was below $10 to $15. This was a massive opportunity for us to be in right now because of the fact that we were approaching a massive earnings on this upcoming Monday at 4 p.m. So after hours and Monday, we're reporting earnings. The stock is at all-time highs right now, which could mean two things. One, we're going to burst through that $85 range and move higher to the upside, closer to 90, 95, and 100. Like I said, $100 plus by summer is not out of the question. Could be happening even in the next couple weeks. But with Palantir, I think that you also got to take the other side of the book and say this thing's rallied so much. It's a hot stock right now. There's a lot of people buying into it. And more specifically, there's a lot of people buying into the earnings hype. So I think that you got to be careful with all those buyers. There's eventually going to be a whole lot of sellers. And when earnings release, if earnings are even good, you're going to see a lot of selling because there's so many buyers in here right now that are just looking for that quick buck. And you've seen that quick buck because the stock itself has rallied over the past couple weeks. You've seen it rally from that price point of $63 down here where we hit those lows, bounced off that support area, and have rallied over the past 2 to 3 weeks from $63 all the way up to highs at 85. There's a lot of people in here that are looking to take profits around earnings, either right before or right after. And even if it's a strong earnings, we may see a quick pop, potentially followed by a really big sell-off. So the stock itself, I think, is a great opportunity of February for you to trade or invest into, depending on which way you're looking at it. Let's see how earnings plays out. This is why I want you on the watch list with this one. This one more specifically, let's watch and see how earnings play. If you want to play the earnings, you can play the pre-run up on Monday. You can play the post-run up on Tuesday. You can play whatever you're looking to go off of this. But let's just see how earnings kind of play out, play off of that. And with that being said, Palantir is a very, very strong stock in my opinion. I think it's very, very hot right now, so be careful because as fast as this thing can go up, we've seen days where this stock drops $5, $10, $15 in a day. So let's just keep that in mind moving forward. And real quick, I did have earnings pulled up. Their expected earnings per share for this quarter is 5 cents. Last time around this quarter, or last year at the same exact quarter, it was 3 cents. So we obviously are looking for a pretty big substantial increase in earnings per share. And then same thing with the beat on earnings. We saw a massive beat back in September when they reported, or in November when they reported earnings in the 4th. And that was a huge surprise where earnings per share were 6 cents versus the analysts at 5 cents. So if we have a beat and we get that 8 cents, that would be massive. And our fourth stock on the list is a little different company we got here, Constellation Energy, ticker symbol CEG. Now, this is an American-made company, and more specifically, they deal with electric power, natural gas, energy management services, that type of stuff. And it's a pretty large company in its space, and its other competitor is Vistra. I'm not too familiar with that company. Now, this company more specifically took a really, really big jump this past year, and even the past couple years with the whole AI data boom. And because of that, the massive cause of increase in electricity used, and it just led to a massive spike in the stock. And the company itself has been reporting very, very strong earnings. Their dividend is at 35 cents per share. Honestly, is looking very, very healthy and has been for the past year. The stock was $125 this past February. Looking a year later, $350 is all-time highs. So it's at a really, really good price point, but has since pulled back. DeepSeek, again, scared another sector of the market and scared the energy sector, more specifically Constellation Energy, dropped from $350 down to $260. Now, this one is definitely one that I want to watch out for. They don't have earnings until March 3rd, so we got another month till earnings. But this one right now is trading at an interesting price point. This $310 area is something we gotta watch out for as an area of resistance that I want to see if we can try and break back above. And then on top of that, $300 was a price that we were holding on to for dear life on Friday. If we pull up a shorter time frame here, you can see that this stock specifically was holding $300 here, $300, $300, $300, and just trying to hold this area and continued to hold it and didn't fall through. We kind of fell down to $298 in the after hours, but I think that we got to watch this one because if it falls below $298 and doesn't recover, there's a really, really good chance that this one goes back at least down to this $280 area, and if even possible, we go back down to $260. So let's watch to see if we can really hold this $298, $300 area, because if not, this rolls back over to the downside. I think this is a great play for the long term, but also looking forward, it's a nice play in the short term. This stock itself has been performing very, very well, very healthy, and anytime there's a massive pullback, the stock rebounds and moves higher to the upside, pulls back, moves higher to the upside. So there's a lot of opportunity with this one. This is a very, very good looking chart holding above this 180 SMA line. So it's a little hot and overextended right now, and I think that's the reason why we're seeing such a massive pullback. So let's wait, see what happens. I think that $300 area needs to be held in order for us to move higher, and if it doesn't, I think it rolls back over to the downside, back to the 280, 260 area. So keep Constellation Energy on your watch list. And my last stock on the list is Tesla, ticker symbol TSLA. Now, this is a stock that has been on a massive run since about October, running from $220 all the way up to $488. Tesla's always been known to just run up extremely high and then pull back to extreme lows. Like, this stock is just insane. The moves that it has to the upside and downside, it swings both ways very, very strongly. And because of that, we got to be careful, because we just had a massive run up from this $200 area up to $500 pretty much. And then now we're pulled back a little bit to this $400 area. Just reported earnings, and earnings honestly wasn't the best. Revenue was up about 2% year over year, but net income, earnings per share, net profit margin, operating income, net cash in hand, everything was down quite a bit. And looking forward on a Tesla, this is obviously a long-term name, and you get the name like Elon Musk, especially now that he's in the White House, and you want to pump that moving forward. I totally get that. But the stock itself, I'm shocked it didn't sell off even more, because this is a name that they're expected to perform very, very well when it comes to earnings, and this wasn't a good quarter. I'll be completely honest. I'm a Tesla bull, but at the end of the day, this was not a good quarter, and we should have seen a massive pullback from this name, but we didn't. So it's definitely something to take into consideration. The fact that the stock is still holding this 380 level is pretty impressive. Saw a massive run up to this $488 level. So why don't we watch this one throughout the month of February? I really like the odds that this one has some sort of pullback, and I think that you can get a great buy on it through February, and then this will be a great turnaround stock through the rest of this year. If you wanted to get into Tesla, wait for a little bit more of a pullback, even closer to this 380. If we break through the 380, you're going to see a massive pullback down to like 350, 340, and I think that's when you could start really picking up some shares. $400 is pretty expensive on the name, but in the long-term game, again, dollar cost averaging. Buy a couple shares here, wait for it to pull back a little more, buy more, buy more, buy more, because once you see another massive run on this thing, next thing you know, it'll be $600, $700, mark my words, by August, September. We'll look back at this video and be like, dang, that $400, $405 price point wasn't really that bad to start an entry point, because now you're looking at a stock that's $700, $800 maybe. So just keep that in mind when going through with a lot of these long-term names, any names in particular. Dollar cost averaging, as long as you have done your due diligence and you've done your research, is not a bad idea, because you're able to buy into stocks and average down when it goes down, get better prices on more shares. get to the position of, let's say you want to get 50 shares on Tesla, start a position here at 400, add 10 shares, add 10 more down at 380. If it drops to 350, 340, add 10 more, add another 10, add another 10. And eventually you're at that $50 or 50 share mark. You have 50 shares at an average now of probably about 370 instead of 400. And then you see that 370 quickly turn into a price where it's now at $600, $700 per share. And you're at a price point, an average price, pretty much. So just keep that in mind when kind of moving forward and kind of playing the long game on a lot of these stocks. But these are my top 5 stocks for the month. Let me know what you guys think about them in the comments below. Hit that subscribe button, like the video, and I'll see you guys next time.